Welcome back to the Investor Professor podcast. This is Dr. Ryan Peckham, and this is episode 159. On today's episode, Cameron and I are going to break down the earnings of Palantir, Amazon, Google. We'll talk about the week that has just transpired. We'll talk about the tariffs and just bring you an episode full of all the market commentary. So get your mind right and let's get to work. Well, welcome back to the podcast, everybody. Cameron, how's your Friday?
Good. Thanks for having me back.
Yeah, man, we got a lot of stuff to get to. Action-packed week, man. I mean, we talked about it last week, Friday, when we left. Well, when we recorded last week, we talked about the tariffs that Trump was threatening. Mm-hmm. It seems like, I swear, man, it seems like it was like 3 weeks ago already.
Yeah.
But it was just last week. So we had that over the weekend. So we had basically two bad Mondays in a row. We had DeepSeek and then tariffs. Mm-hmm. And then we had Palantir report, we had Google report, and we had Amazon report. So you tell me where you want to start. We actually did a podcast like thing. What do we call that? The little like an agenda.
An agenda?
Do we even have it? Oh, you have it on digital.
Yeah, we're getting professional out here.
All right,
you didn't even look at it though.
No, I didn't. And then I was looking at your notepad and I was like, oh man, neither one of us brought it, but I forgot you're young and you have it digital.
Mm-hmm. Yeah, it was a crazy week because we had, like you said, we had a crazy Monday, then we had earnings, but even today, like today was a crazy day.
Yeah.
Like we're in the red. It's Friday. We're recording on a Friday. So the market just closed not long ago. It was crazy on the way out.
I think it's like the traders, like, you know, I always think about there being two markets, like investors and traders.
Yeah.
And I think that like the people who are trading stock, you know, in and out, day traders, whatever, I think that they don't want to hold over the weekend.
No. There's so much volatility, but they do make money in volatility, right? So
yeah, for sure. I mean, like
they're probably doing well if you're on the right side of these trades.
Yeah, and and if they're making the right moves. But like last week, you had Trump saying he was going to do tariffs 30%, 25%, 25% on Mexico and Canada, tanks the market. You know, the market opens up down. The Dow opened up down 600 on Monday, and I always ask about like who's selling. Like, why would you like sell into that? You have to have at least a little awareness that like it's probably going to get dialed back a little bit. I mean, I just don't understand. I mean, you're waking up like people are selling at 4 a.m. It's just crazy to me.
What do you think moved the market more this week? Trump announcing tariffs and then some of the other stuff that's going on with that he's doing, whether it's Doge or whatever,
right.
Or earnings. Which one do you think created more volatility in the market?
Oh, the political stuff for sure.
Okay.
Yeah.
Which one out of all the political stuff do you think was the big push?
Well, the tariff stuff got taken care of pretty quickly.
Well, now we got the tariff stuff today, though, too.
Yeah, what, Japan or something?
Yeah, and basically...
It's hard to keep up with.
I forget what they're calling it, but like a mutual tariff. If they're tariffing us...
We're going
to tariff them the same thing back.
It also depends on what industry you're in, where the tariffs are targeting, like who's, you know, what companies are really going to be impacted by that. I mean, like... Yeah. So that kind of gets shaken out because fund managers go in there and they get rid of one company, they add another company, but it does show you. So I will say that I would like to make this point that some of the tariff geopolitical stuff gets kind of to the back burner of the news cycle because so many companies are reporting. So just understand that when companies are no longer reporting, like all of this political stuff is going to be front and center for a month or 6 weeks until companies start reporting, you know, until we have like, that's the one thing that I always think that people don't understand is like once companies are done reporting, it is all the geopolitical stuff like right in your face.
Yeah, it's a little more quiet.
So you better have a little cash to like be able to take advantage of some of this.
I agree. Yeah, I think the tariffs have been kind of nuts. I already told you about this, but I did a little bit of research on the whole tariff thing and how tariffs actually started. Mm-hmm. So they started in like the 30s, I think. Or at least for America, The U.S. it did. And the reason why it started was because after the war, we were in such a good position that it was kind of like a friendly deal. Hey, everyone's doing rough.
Right.
Tariff us, and we're going to spread the wealth kind of, right?
Okay.
And then it just got stuck. It just stuck.
Like I said, like everything is just like, hey, we're just going to do this for a little bit.
Yeah, and then it just sticks.
Yeah.
So I don't know. What are your thoughts on the whole tariff thing and how it's going to impact some of these companies?
I mean, like, it's really harsh for like automobile makers, that kind of thing. But again, like you look at, well, especially like this is just about Canada and Mexico, but you look at like why America has done so well, why North America has done so well. And I think I might have said this last week, but you take, American innovation, you partner it with Canada's like natural resources and the low cost of labor in Mexico. And when those three are working together, I mean, it's a pretty powerful machine,
Yeah.
So, you hope that it kind of gets ironed out, that it isn't, I'm not sure it should really impact your investment theme one way or another. But it does, like some companies, especially like autos. I mean, autos are it's just so competitive already.
Yeah.
And then you throw this on top. It's like, man, there's just easier places to make money.
Yeah. It's odd.
Yeah. And well, I'm just saying, sorry to cut you off, but you look at like Ford earnings and things. It's just
Ford is just such a tough stock.
It's just easier places to make money.
Yeah, I agree. I also think too, like, everyone talks about Whirlpool, right?
Yeah. Geez.
So like them, but then also too, one of the positions I've been fond of is Builders First Source, right? We've talked about them for a while. So they do all the materials for home building. And I mean, if you live in DFW, you drive around, you throw a rock, you're going to hit some new development, some new housing track. And they get like 25% of the lumber from Canada.
Yeah.
Which if the tariffs end up coming through, who's going to pay it? Like the tariff sheet is given to Builders First Source when they acquire the lumber, then they got to pass the cost along. So that's going to jack the price of housing up. And then plus high rates, that's tough.
Well, that, and you see that like if they do those tariffs, I mean, the amount of like inflation that's gonna create. I mean, I think,
my gosh.
Well, and the other thing too is, I mean, like, hey, let's be real, man. We're in Texas, man. What about the price of guacamole?
Guacamole and the avocados. Hey, you're talking to a California guy, right? That's where the avocados come from. Strawberries and avocados.
Well, and I mean, there's a lot of coming from Mexico, and the thing is those. So normally when you have a tariff that you expect to happen, businesses will order a lot of materials
up in inventory
to up their inventory. Yeah. But when you think about like all the fruits and vegetables that are imported from Mexico, you can't stock that. I mean, that stuff. So you would see an immediate impact on your grocery bill in about 10 days.
That's fantastic. Everyone's going to love that.
Yeah, that's
What's
right.
The price of eggs everyone keeps talking about.
Yeah. I mean, so, but again, I mean, I think, I don't know. I think it blows over pretty quickly.
I think it's funny you bring that up. I was thinking about that on Monday because Jim Cramer, so he was on CNBC and did you know he has a tequila company?
Yeah.
Okay. So it's him and his wife that own this tequila company. And he was talking about that going into this, right? Because a lot of the materials they need for tequila is sourced from Mexico. Mm-hmm. They call it channel stuffing. He just absolutely ordered up, and he said he has it all in New Mexico now. Right. And I'm thinking, that's pretty smart, but what is that going to do for companies that are public? Like, are their inventory or their materials are going to go up? Their expenses are probably going to go up.
Yeah.
So maybe it makes them look less attractive.
Yeah.
Right. I mean, how do you take advantage of that?
Yeah. And and normally, again, it's like a short-term deal. So I don't know. I mean, we'll see how it really plays out. And again, like this was a story on Monday. And by midday Monday, it was done, and the Dow, opened down 600, and then it closed down 100.
Yeah.
So, and then Monday night we had Palantir.
Tell me,
how'd they do on earnings?
They did okay.
They did all right.
Okay. Yeah.
How much were they up for the week?
Something ridiculous.
Let me see. I'll see if I can pull that. Gosh, I should have done this early. Palantir had incredible earnings. I think they made $100 million more than was expected. And I know that the first reaction on Monday night, they were up 25%. So for the week, let's see, they were up 34%.
Yeah, I knew it was something crazy.
So 34% for the week. Yeah, they finished at 110.85. They were actually today, they were at 113 for most of the day. And then at the end of the day, they kind of sold off with kind of every company that sold off going into the weekend. But I mean, yeah.
So where's your headspace with Palantir right now, trading at 110 and then also having seen the earnings?
I mean, their earnings were great. And I don't know what to say about the stock price. Like, I really don't. Like, I think they'll continue to go up. I'm not sure it's a great thing. Yeah, don't even talk about their PE ratio.
Yeah.
Is it 583 on your
That's
screen?
exactly what it is. Yeah.
Yeah, I mean, no, you go for it.
You had a very good point. I think it was on Tuesday where you said, I knew it was going to be good, but this is pretty rich. This is, I mean, it's definitely had a lot of growth, but I think it's kind of like you actually taught me this. If you were looking at PE ratios and that's how you defined your investment thesis on some of these positions, you would miss out on all the big ones.
I did miss, like, I missed out on like Apple early on. Like, when I say early on, I'm talking like iPhone early on, Amazon early on, because I had like, my college professors always said if it goes above this certain PE ratio, don't invest in it. And I kind of lived by that for a while. And then I was like, man, every single company, every good company, every company that's like changing an industry or whatever. I mean, you look at Uber, you look at any of these, I mean, they all looked expensive at some point. Mm-hmm. But again, like, evaluation, but, can only get so high. But again, like Palantir, I mean, it's definitely got momentum on its side. And I guess one of the things that worries me about the stock price being so high so quickly is that I really like the company.
Yeah.
And I don't want the stock price to get completely detached from the actual underlying company where like all the Reddit, GameStop type, traders are just pushing it up because they had such a good quarter that just the momentum just carries this thing. But I mean, like I said, like today it traded about 113 for most of the day. And then the last 30 minutes, it went down to 110.85, which shows you there's a lot of probably traders that are in the stock, like day traders that are just trying to make a little money and they wanted to get out for the weekend. So we'll see. But I mean, I really do like the company. And it's not just the defense stuff. It's the stuff they're doing with corporations and their growth rate and all that. But again, I mean, and there's a lot of institutions, there's a lot of negative talk about, there's investors out there, institutional investors talking about how rich the valuation is. And I kind of get like, I understand that, but also I wonder like how many of them missed it. Mm-hmm. And they're almost like
trying to talk down the price.
They're talking it down because they want to get in.
I agree with that. Yeah. Palantir, I think, is a lean, mean machine. That rhymed. Do you like that?
Yeah.
And I'm not going to get the shock factor I wanted because I already told you this. But everyone talks about Palantir and they compare it to Lockheed Martin, right? Because they think that they're going to be a real competitor for them, right?
Yeah.
So if you look, like, the price, the PE ratio is pretty aggressive for Palantir. But here's what I mean by lean. Like, they're hiring. If you go to their careers page, they have a lot of roles open, but not as much as you would think. Mm-hmm. So they're still like being lean on that sense. And you look at Lockheed Martin, right? How many employees Lockheed Martin has? 122,000 employees.
Yeah.
And then you're thinking, okay, if Lockheed Martin is getting worried about Palantir taking a lot of their market share, they certainly, what do they got? How many employees they got? 3,800. They have 3,800 employees. So that's the lean part. The mean part is the government revenue, which is very sticky. So in a past life, I used to work in the software industry. And the two things that I noticed real quick working in the software industry was that if you were in the public sector, you sold in the public sector, that is one of the toughest sales because it is so sticky.
Right.
Because the contract terms are extended pretty good. And then also too, there's so many decision makers that to get everybody in the same room to decide yes on something to move, what they call rip and replace, is extremely difficult.
Okay.
That goes great for them, right?
Yeah.
And then you just showed me this video. What was it? The Miracle?
Yeah, the Miracle client.
Okay, so that was all
Cleveland Clinic.
Cleveland Clinic, right? So hospitals and healthcare, same thing. They are the hardest people to sell to. They are the most difficult people to sell to because there's so much regulation. HIPAA, when it comes to analytics and anything data-wise, is like, it is so difficult. Just the implementation piece alone for some of the software is difficult. And the fact that that's where they are anchoring themselves in their revenue tells me that is sticky.
Yeah, and that video is called Palantir's Miracle Client. It talks about how they basically created an AI model of the Cleveland Clinic and then optimized it.
Yeah.
Like they took all of their stuff and then, it's pretty
Which is
incredible.
smart. It's smart. But think about it. Like,
think about how many companies can use that. But here's the thing. So what do you think Lockheed Martin's market cap is? Don't look.
It's got to be pretty big.
Guess.
I don't want to guess. I feel like I'm going to be so off.
Okay, it's 100 billion.
Okay, I was going to say like 120 billion.
So they're 100. Actually, it's 104.6 billion.
Okay, I know what's Palantir is past it.
Okay, it's 252 billion.
Yeah, Palantir's got a bigger market cap than a lot of companies right now.
Well, so the difference, like everybody, the Lockheed Martin thing. Lockheed Martin isn't working with as far as I know, like public entities. I mean, so Palantir has like the corporate side and the defense side. But I mean, they're just.
But their defense side is their anchor. Like,
oh yeah, well, it's
their revenue back. Like that's a lot of it.
For so long, that was like. I mean, again, like when we talked about investing in Palantir early. I mean, the thesis is like, you look at the government contracts they had, and you thought, okay, well, the company is not going to go bankrupt. I mean, they have income coming in from these contracts. So, I don't know. It's one of those things where, I've taken a little profit for some clients on Palantir. I have taken profits. But I also I really like the company, and I'm definitely going to let it run.
Well, you should, I'd probably call that out though. Like taking profits on something that you bought for $10 a share, right, is different than your investment thesis on this position has changed because really you're managing your risk. Right?
Yeah.
And you either, because it's such a big position, it's so much of your portfolio, you have two options to manage that risk. It's you dial it back,
right,
or you somehow make more money and put more money in the portfolio. That position is kind of getting diversified away.
Correct.
And the easiest way to do that is you trim.
Yeah. Well, and you can also when you buy it, you have something that goes up this much. I mean, when you make, it's weird looking at your cost basis, and you see 1,000% return. That's pretty neat.
Yeah.
But I mean, you can literally double your money. You can take the money that you originally invested, times it by 2, pull that off. You've already doubled your money, and then you have all these free shares. But so the main thing, the reason I would not, I have so many horror stories of people who made a really good investment.
They never sold.
They sell out. They sell out completely, and then the thing really goes up. So I've seen it with, there's a company called, I don't even know if I've ever told you this story, but Jazz Pharmaceuticals. Went from $8 to $16.
Gotta love the pharmaceuticals.
Had somebody I knew 8 to 16, sells out, makes 100% on their money, and Jazz Pharmaceuticals is currently trading at $120 a share.
Yeah.
So that was a huge, miss. I mean, that kind of stuff. So you just have to take that, but you do at least have to have a consideration. One of the things so anyways, I'm sure we'll talk a lot more about that. So then we had Google on Tuesday. So Google's quarter, I guess I'll say this because it's going to come up with Amazon too, but Google's quarter, Amazon's quarter, the things that were negative about their quarters was positive for NVIDIA because they both said that they're going to spend more on AI, data centers. Even with the whole DeepSeek thing we had a couple weeks ago, they're not slowing down on spending at all. And actually, they're both going above what the street was expecting.
Are you saying NVIDIA versus, or are you saying Amazon versus Google?
No, I'm saying Google and Amazon.
Google and Amazon. Okay, you said NVIDIA. That's
sorry.
It's Amazon and Google.
I'm saying it's good for NVIDIA because they're showing how much they're actually going to spend.
Yeah.
But at the start of the week, Google's down 10% for the week. Before they reported earnings, they were at 206. They're down to 185 today. But it just wasn't you follow Google closer than I do.
Yeah, I'm a big fan of Google. I think
gosh, YouTube's incredible.
YouTube kills it.
They're like Netflix. I mean, so if they spun YouTube off of Google,
that'd be tough. I don't like that. Take that back. I don't want it. Don't put that out there. That's Google's thing, man. They are well diversified. They have and here's I always talk about this, talent. People will apply for Google 4 times just looking for that one time that they say yes and you can get in.
Yeah. Did they pick the right animal in the interview?
Oh my gosh, they do such a great job of just
Yeah.
but you got to think like Google's been around for a while.
Yeah.
And they're a big company, but they still have people out the door, around the corner waiting to get in and work for them and work hard for them.
Yeah. I will say this. So they're at their PE ratio. So we talked about Palantir 500, right?
Yeah. It's not bad.
Their PE ratio is 23.
I know. Yeah.
Their average PE ratio, and I know this over the last 5 years, is 30. So they are trading at a much lower valuation than they normally are, which could be some of the lawsuits, some of that kind of stuff. But I mean, still, when you look at kind of these big companies, I mean, they're still looking pretty good.
Google is just, I think they have not, they're the one player in this AI space that has so much of their bet that hasn't been monetized yet. And what I mean by that is like they all have these AI bots, right? But Google has search. I've talked about this before. They own search. So when you own search, you sell that mind share of the customer to advertisers. So this AI product, right? There's Gemini. Is it still Gemini or is it Bard?
No,
I forget.
Well, I mean, the one that most people are going to know is Gemini when you type something into the search bar.
Yeah, I think it was Bard at one point, but Gemini. So it's like, if you start using Gemini, Google Gemini, and then you start getting some product placement on there.
Yeah.
When you prompt it with certain things, they can make money that way, just like they do with YouTube.
Yeah. No, that's true. That's true. And then Amazon was yesterday. Amazon's quarter. This might be the first quarter. I got to check the numbers, but I think that the anticipation was this would be the first time that Amazon outsold Walmart.
Wow.
So that'll be pretty incredible.
That's a milestone.
But Amazon, again, they were expecting to spend $85 billion this year on CapEx, which is capital expenditures.
Bump that number up a little bit.
So then they announced they're going to spend $105 billion.
Yeah,
on Amazon Web Services and all that. Which I mean, but Jassy is a good CEO, man.
105 is more than anybody else.
Yeah,
that is the most right now.
Yeah, $105 billion. But again, this is what you want to see. This is like what you want in your personal life. Like you look at Amazon, they make so much money off of just Amazon, like what we think of, like the packages coming to your door, which we all have like packages coming to our door all the time.
And the Prime memberships like Costco.
Prime memberships. So they have that revenue coming in, and they did such a good job of diversifying, taking that money, go invest in another business like Amazon Web Services.
And advertising.
But you think about somebody, a person who you're making a lot of money. You start investing somewhere else. You start diversifying your income stream. I mean, like you could take what Amazon does, apply that to your personal life. Take the money. You have something that's
a great point.
Your cash cow. You take that. You go put that money somewhere else. You start investing in the stock market or whatever, real estate, whatever your choice is. But you diversify your income. I mean, it's the same thing. Like Amazon was down today, and that is one that I'm going to look to add to for so many people. At 220, 228, 229. It's such a good company. And they're like Jassy is a good CEO. And even though they're down, like just because they're going to spend more money, but Amazon has been probably one of the best that, yes, they spend a lot of money, but man, they get a return on that money later on.
Yeah, they do.
I mean, they really, really do. And they beat earnings per share. They beat expectations by 25%.
Mm-hmm.
So I look at them and I look at how good that quarter was. And you look, I mean, there's, everybody talks about the Magnificent Seven and, how they've pulled the market. But man, when you look at other companies, like when you compare like who else you can invest in, gosh, man, when you look at Amazon, Meta, by the way, today.
Killed it.
New record, 15 days in a row Meta has been up.
So I'm going to blow your mind. I was thinking about this morning. So ever since inauguration, Meta has never had a red day.
Wow.
They've never closed on a red day.
Wow. They've opened down. Even DeepSeek, even all that, they opened down, but they end the day up. But they're clean, man. Their financials are amazing. Like
they're diversified, just like we were talking about.
Yeah, so they look good. That's one company I hope they split. For the audience, I'm putting it out there in the universe. I hope Meta splits.
More accessible.
Yeah, I mean, you look. Even Eli Lilly had a good quarter this year. I mean, this quarter. I mean, but there were some pretty bad quarters out there too. I mean, there's some companies that are struggling.
I think all these companies we're talking about, You take that picture of that inauguration and you circle every tech CEO.
Yeah, it's weird, right?
They're all doing okay. You know, you got Bezos.
You have to, like, if you want to be a good investor, you have to follow the money. Like, money is flowing somewhere.
Oh, yeah.
Like, you got to figure out where's the money flowing to.
I agree.
I mean, you know, so we were talking earlier today, and I don't know if this is on our topic list, but like, you know, we're going to have like this tax reform is going to come up, and we don't have to spend a lot of time on this, but just kind of putting it out there. But like tax reforms coming up, you know, what are they going to have to give to get, you know? So like they talked about closing the loophole and the carried interest. So we'll see that. I mean, there's some weird, you know, there's some things that could really be on the horizon that are going to be, you know, be out there. The only big companies that we follow that you and I talk a lot about, and I've talked to the audience about, we have NVIDIA that still hasn't reported, which is going to be on February 26th.
Okay.
And then we have Mercado Libre on the 20th, which is my South American beauty.
There you go.
So,
yeah, the carried interest is interesting. That has been brought up, I think, countless times, and it's never worked. It's never gone through.
Right.
Because you got, you know, BlackRock, Blackstone. They're not going to let that happen.
We'll see.
You know what I mean? Like they throw so much money at that. They would lose a lot.
Yeah.
If they lost that tax loophole.
Yeah. We'll see. We'll see how that goes. I mean, that'll be one of those like, and that's the thing. So when we sit here and we talk about these things, it's just like the tariffs.
Yeah.
You can't make investment decisions based off what you think's going to happen. Like you got to wait till stuff actually gets worked out and is done and that kind of thing before you actually start making investment decisions.
You know who else's earnings is coming up is Salesforce, February 26th.
Okay. So that's the same day.
Yeah.
Same day as NVIDIA.
Yeah. That'll be interesting. That's actually going to be really interesting. Can you imagine having the same earnings release as NVIDIA? That's got to be tough.
Yeah.
Where's all the focus?
You're going to be on the back page. Maybe it's a good thing.
Yeah, maybe. But Salesforce, I've noticed in this last week, they are back to talent. If you look at all the hires and, you know, you just got to go to LinkedIn and look to see who has started at Salesforce this last week. They have this new AE, account executive agent force.
Yeah.
They're building out this whole section of within their Salesforce.
That's all the AI stuff, right? Agent force or whatever.
Yeah. And they are putting a lot of resources into it. And the people that they're hiring, which I think is interesting, because I've thought about this for a while. In tech, a lot of these products are so technical and they're so advanced. Back in the day, when you used to have this smooth talking salesperson with some charisma.
You talking about me?
Yeah. Yeah. So that is slowly fading out.
Oh, okay.
Yeah. Sorry about that. You know, if you were in line to go get a job at Salesforce, it's going to be tough. But that is slowly fading off. And there is a need for somebody with a technical background. So all these AEs, these salespeople, they all come from a technical background.
What does AE stand for?
Account executive.
Okay.
So in the sales process, usually how it works is the account executive owns the deal cycle, and then they bring in the smart person who they would call the solution consultant or the technical consultant or the technical architect.
Yeah.
Fill in the blank. They really talk the tech.
Yeah.
Right. And now Salesforce is figuring out, why don't we just have that person lead it?
Right.
Which makes things quicker.
Yeah.
Quicker deal cycle. I see that working out well for them.
The one thing that you brought into my world is the fact that, like, you know, we always worry about technological changes and people who are going to lose their jobs.
Yeah.
And again, we've talked about this before, so I won't spend too much time on it, but we talk about, like, you don't think about the jobs that are going to be created. Like, I knew that there was a lot of people in tech, you know, working, but like when I talk to you and like the number of layers of people in some of these technology companies is absolute insanity. The number of people that are like working in this industry.
The titles. Like if you,
you
should just for fun.
Is there like an AE 1, 2, 3, you know?
Yeah, basically instead of, I won't bore you with it, but yes.
So one of the companies, like for, you know, the people listening, investors out there listening to this, one company that I think has actually gotten too beat up from their earnings is Microsoft. So they've gone from 447 and today they closed at 409. So their quarter wasn't that bad for them to be in the low 400s. But I do want to say that like Microsoft has made applying via LinkedIn a little too easy, because I sit on some hiring boards where like people just have to click. They just have to click on, hey, you want to apply for this job? Just click. And it basically uses all your data from LinkedIn and applies for jobs for you.
Yeah. Hold on. What do you mean by that? Because Microsoft owns LinkedIn. That's
right.
why you're saying
That's
that.
why I'm saying that.
Yeah.
So I'm saying I'm on some boards where we're looking at like hiring people and stuff, and like the number of people, the applications have gone way up because it's just like I just got to click one button on LinkedIn.
Sounds like there's an opportunity there for a business to come in and
I'm sure
create some efficiencies.
Yeah. So this next week though, there's not a whole lot going on because we have a kind of an in-between week. Then there will be some people this week, which will be like Coca-Cola and those kinds, some of the Dow companies, but I don't know. Maybe this weekend will be kind of.
No, don't say it.
We got the Super Bowl on Sunday.
Okay.
Are you going to bet on the Super Bowl?
I am not, but apparently there's a record right now.
Everybody. You're the only person your age that I know that is not going to bet on the Super Bowl.
No, I get my risk in the market. I'm okay.
Have you seen some of the bets that are available?
Like the spreads?
No, like the bets, like the prop bets that are available.
No, I haven't.
So do you want to know some of them?
Yeah, go for it.
So you can bet on like what color Gatorade is going to be.
Oh yeah. Well, hold on. What site is this that does this?
I mean, all of them, I think.
There is a site.
I don't know how I'm going to tell my wife that we lost our house because the person sang the national anthem 2 seconds longer than they were supposed to. You can bet on the length of the national anthem.
You got that joke written down somewhere because that felt pretty good. It's a good one though.
Yeah. Well, they were saying like people will stay outside of the stadium. They'll stand outside the stadium when they rehearse the national anthem and time it.
Yeah. Oh, I'm sure. What is that site? There is a Poly Market. That's what you're talking about.
No,
right?
but DraftKings will do it. Like all of the sites will do like all these bets.
Yeah, see, that's ridiculous. There is a lot of people in my generation that bet on sports, and that is, I don't know, it's a slippery slope. It really is because you get really caught up in it. But yeah,
do you want to know how I know this much?
Tell me.
Okay, so I'm teaching.
Oh, you're a teacher.
Well, I'm teaching these undergrads, right? I cannot get them to talk about investing at all. I can't get anybody in the class to participate. I mean, there's some, right? Mm-hmm. I can't get them to talk. I bring up Super Bowl betting. These are people that are 21 years old, right? Mm-hmm. These are my juniors, that undergrads. I bring up Super Bowl. I can't get them to stop talking about all these bets.
Yeah.
So the estimate is expected to be about $1.4 billion legally. That's the legal version of bets this weekend for the Super Bowl. Which is kind of nuts, man. Yeah. Oh, and they say if you add in illegal betting, it hits like 6.4 billion.
See, now that is the number right there. That's crazy.
But it's like offices, offices doing, Super Bowl squares or me and you. So $100. What color Gatorade we got?
I'm going with that lime. That green? The green.
All right, I'll put 100 on red.
Oh.
See, we just made the 6.4 go up.
There we go.
That's how easy it is.
You
can bet on the coin toss. You can bet on what Kendrick Lamar is going to sing first. I mean, it's absolutely incredible.
That is crazy.
But it is like, it's the number of all jokes aside, the number of young people gambling on sports, like we're trying to convert them to investors. Like it is a problem, the number of young people betting on sports.
Yeah. And I think COVID did that. I really do. Mm-hmm. Like that probably brought a lot of that, but I don't know. It creates some tough habits because you go to these Reddit pages that are all about options trading and stuff. It's the same mentality, same age group oftentimes too.
So when you look at the brain chemistry of day traders versus gamblers, it's very similar.
Yep.
It's extremely similar, but yeah, I mean it's just kind of the makeup of it. It's really, but it is a problem because you're right. Like it builds bad habits. So what you said to me is what I said to my class. So my class asked me if I was a sports gambler, and I said no. I said I have enough risk in the market. Like I don't need it. I don't need it. Like I don't need that in my life. Like I worry enough about somebody not reporting the earnings that are expected.
Funny though? Isn't that funny, the habit you build? Because like even when you go to a casino, which I'm not a frequent flyer at casinos, but if I'll go with a friend or something, I'm not gambling.
Right. Yeah.
For me, I don't want to risk even the $50.
Yeah.
But I will pony up 10 grand on Amazon being, down.
Right.
So it's just so funny. It's different.
Well, it is different, but
I know Amazon's going to pay me and I don't have to work there, right?
Yeah. Yeah. And the other thing too, though, is like when you think about investing, you don't have to, like with gambling, it's win or lose.
Yeah, so it's instant. That's the other piece.
So it's instant. And like if Amazon, like if I would have invested in Amazon before they reported their earnings, they're down $10 today based on those earnings. Okay, the stock is down $10 a share. I can just hold it. I can just wait for a couple good days, or I can wait for Amazon. Like I can wait for it to recover. Like it's not just instantaneous win loss. And when you look at like the data, so like. This is where we talk about time in the market versus timing the market. But if you're only going to be an investor for 1 year, the percentage that you're going to win or lose, that you're going to make money or lose money is 50%, which is pretty close to gambling. But as you stay invested for a long period of time, the odds that you're going to make money go up exponentially.
So, okay, I'm going to pose you with a question. I know we're probably going over on time here a little bit, but if you're somebody that is my age, right? You're in this stage of life, you don't own a home yet.
Right.
But you're at a point now where you're doing well in work. You have some change set aside. You're wondering, do I start the portfolio or do I go buy my house? I go buy the first house or whatever it may be. What would you do and how would you prepare best to do it?
Well, I mean, you're assuming that this person's already saved some money.
Yes.
So they have some
money. They got
money
the rainy day fund.
They have a rainy day fund set aside, all that. I mean, the key thing for somebody who's young, because I made this mistake. I bought a house when I was 27 years old or whatever, and I sold it a year later for the same price, and I lost 15 grand because of all the fees.
Yeah.
So if you're going to buy a house, you have to know that you're going to be where you're at, because if unless the market is just going crazy up every year, which right now it's not. But if you're not going to be in that house for at least 3 years, like you shouldn't buy it. Like you're not going to get enough equity in it to where you're going to be able to make, where you're going to make money.
Yeah.
So you got to know you're going to be where you're going to be. But I would never dissuade somebody if they thought they were in the area that they were in, if they find a good deal on a house or something, to do it. And if they think they're going to move around, then I would encourage them to do the portfolio.
Yeah, that's a good point.
I mean, but you got to, like, that is kind of the key. Like, you got to think that you're going to be in the area that you're going to be in.
There's so much more to this, because I feel like even when, talking to clients and stuff, there's what makes sense on paper, like
right,
financially.
Yeah.
But then there is the behavior piece of it.
Of course.
That has to be, even sometimes from I would actually say most people, is more than 50% of the decision.
Yeah.
Where it's like, do I like the convenience of the apartment? Do I, want to stay here like you're saying?
Yeah.
Do I have a family? That kind of deal. Do whatever, recently married, whatever it is. You got to factor that in.
And you want it to be something, again, like investing, the house, whatever, where you can do it consistently and that it's what you want. Like that is literally, like you said, 50% of it.
Yeah, I agree.
So if the house is super important to you, do the house. Of the portfolio, you have to, that's what this is. You educate yourself. You make an educated decision based on what's important to you and all the factors, but you got to be educated enough to know like what kind of decision you're making.
Agreed.
So, all right, so we good?
That's good.
All right, so Cameron's got green Gatorade. I got red Gatorade. We'll see what happens. Enjoy Super Bowl Sunday. And as always, don't mistake activity for achievement. Thanks, everybody.